Having done a number of real estate deals in numerous countries all around the world, I'm often asked, Andrew, how can I find that great deal overseas? Well, in this video, I'm going to share with you a common sense, simple starting point you can use to identify good deals and good markets. Hi, I'm Andrew Henderson, and if you'd like for my team and I to personally help you either figure out real estate R&D data from all around the world or put together your own custom Nomad Capitalist plan, you can learn how we do that at nomadcapitalist.com. Now let's talk about how to identify good deals in good markets overseas. You know, we talk about go where you're treated best. Those are the 5 magic words. And if I'm looking right now as I'm recording this at markets like the United States, I see them as overheated. I see them as lower yielding than they should be. I see them as having less growth potential than they should. I mean, I sold a house in the United States. It wasn't that long ago. The fact that it's more than doubled, to me, just shows how overheated the market there is. Now, I look at markets all around the world that I think have growth potential where they can double relatively quickly. And I've invested in markets that have lower taxes, have higher growth probability. I'm making good yield on the properties that I choose to rent out. And so the one simple metric that I'm using that I don't see used as much in some countries like the United States is very simply in US dollars, price per meter. This is the great equalizer. Now, you want to make sure you're doing this in US dollars. You could do it in euros, but US dollars, because there are more countries that are not dollarized per se, that use dollars for real estate transactions. Countries like Georgia, for example, where the dollar is not their currency, but people choose to transact in dollars. To me, dollars just make sense. But I want to compare the price per meter of the property. And if I do that, I can instantly find, for example, that in my opinion, buying property in the long term in Kuala Lumpur, Malaysia is a better deal than Bangkok in Thailand, which even some of my friends who live in Bangkok, they think that's actually the case. They think that the time to buy was 5 or 10 years ago. And so if I look at Kuala Lumpur, what do I see? If I take equal neighborhoods, I would expect to pay as much as double in Bangkok as I would in Kuala Lumpur. Now, Kuala Lumpur does have a bit of an oversupply issue, which is why I say in the long term I'm happier to buy property in Kuala Lumpur. Because I'm not going to expect huge growth right now. I'm not going to expect huge yields right now, but I do see greater growth in the future. Now, why is that the starting point? Because I look at Malaysia as a more developed country than Thailand. In fact, if you look at Malaysia, Malaysia is more developed in a number of metrics than some of the poorer European Union states, and they've got a goal to basically reach mid-tier EU development status, I believe by 2030. And so if we're looking long term, to me, Malaysia, just look at the quality of their passport. It's a pretty darn good passport. And so that speaks to the level of development. Yet the price is half of a country that's less developed. Now, Bangkok's obviously a bigger city. You've got more growth. But for me as an investor, when I'm investing overseas, I like to look at tier A core properties. I like to buy in locations that are going to be rock solid. And by investing in markets that are emerging, or that people believe are emerging, you can buy in great locations and still get decent returns on your money. Whereas if you're buying something maybe in part of Midtown Manhattan or something, which everyone considers rock solid, not only is that market a bit more moody in terms of ups and downs, but your yield is probably going to be very low to compensate for that alleged stability. So I want to buy very stable locations in places like Malaysia. And to me, if I'm comparing Malaysia to Bangkok, I'm not only seeing that I'm getting half the price, I'm seeing a more developed country, which now makes it even more so. I'm seeing that I have less risk on that level. And I'm also seeing that actually I think that the Malaysian ringgit against the US dollar could outperform the Thai baht against the US dollar in the future. So my starting point is price per meter in US dollars, and I'm going from there. Now, what you want to be aware of is that you need fair play here. So you'll see what I said. I said location versus equal location. I think sometimes what people do is they'll look at one market. Let's say you're coming from the United States and you live in some kind of suburban community. You'll hear, okay, price per meter, I don't know what a meter is, but 10.76 square feet to 1 meter. And you'll say, okay, I think, for example, my house where I lived in Arizona, not in the middle of the city, but in a nice area, was, I don't know, $1,500 per meter, for example. Okay, so I could say, well, $1,500 a meter, and I could start traveling around the world, and I could start looking in, the city center, like where I live in Kuala Lumpur when I'm there. I live, right in the KLCC area. I'm living in the capital of the country, not just the state, but the country. I'm a stone's throw from the Petronas Towers. I've got all kinds of stuff going on around me, and so when I paid a little over $3,000 per square meter, you'd say, wow, that's a terrible deal. But we're not comparing apples to oranges, because if you went to, Washington, D.C., or if you went to New York City, the financial capital of the United States, and you tried to find a location, near the Empire State Building, or near, the White House, you're obviously going to be paying a lot more than $3,000. And so my area in a good suburb, with a big university and all that, I mean, even those are good things for my house in the United States that I sold many years ago. It doesn't really compare equally. And so I think sometimes people say, oh, I was in Dubai, and there was some kind of suburban project in Dubai that they were selling. They were promoting a low price point. And so then they come to, let's say, Tbilisi, and I'm showing them stuff in the core of the city, and they're saying, well, why is it the same price? Dubai is more developed. I said, well, because you're looking at inventory that's not next to, the Burj Khalifa, right? So you have to be fair in that regard. But if you are fair, you can take that data and you can find some pretty interesting stuff. So for example, we have a full-time R&D team that works for us here at Nomad Capitalist. And one person, all they do is look at real estate trends, and I've trained them, how I want them to look at stuff. They dive deep. We look at property listings that you're not going to find looking at English language websites. We have people who speak different languages, and we're getting to the bottom of it. So when we recently started finding a small handful of properties in Bogota, Colombia, which is the second freest economy in South America, I think it's got a lot of potential. I've been saying that for years. Here we are in the capital city, 7 million people. Officially, it's actually more, in a country of 50 million people. And I'm looking at a great area, a stone's throw from the Maserati dealership, in the Four Seasons, and great restaurants, in a really respected, prestigious area of town. And we're seeing properties that you can buy at fire sale prices of $1,100 per meter, and we're finding stuff, just a decent smattering of inventory, $1,300, $1,400 a meter. I'm comparing that to a market such as Phnom Penh in Cambodia, where a friend of mine recently bought an apartment building, paid about $850 a meter. Now that was a stone's throw from the Royal Palace. So in Bogota, it's a little bit different story, because you don't really want to be in the city center, because the safer areas are north in the city, and so people with money, they don't live in the city center. So you could probably call that a fair comparison. Now, $850 in Phnom Penh, Cambodia, I think is a great deal also. Low taxes there, lots of opportunity. But I'm looking at a city that's much smaller in size, in a country that's 14, 15 million people. Certainly its presence in Southeast Asia is good. Lots of Chinese investors go there now. You've seen some prices triple in the last couple of years in other cities outside of the capital. So there's a lot of opportunity there. But I think if you don't get into Cambodia in the near future, you're probably going to miss it. It may be Bangkok 15 or 20 years from now, but you're going to see, I think, a lot of the gains happening in the next couple of years. And so I'm looking at more elastic growth in a place like Bogota, because there's much bigger domestic market. It's also in a part of the world where it's not Southeast Asia, it's not near China, but Latin America actually, by some metrics, has been outpacing Asia as a region in terms of growth. And so I say to myself, those are pretty fair comparisons. I like the $850 per meter as well, but holy cow, if you aren't looking at Colombia, to me, that's a reason to look at it. If I can pick up property for that price and get a decent yield with similar, pro-landlord rules, that's a great metric. What's interested me ever since we started putting a lot more effort into looking at properties is that you can really find some great deals around the world. There's a lot of markets where, again, if you're the gringo and you're buying property from the English-speaking agency, you're going to pay a lot more. But there are a lot of really great world-class cities with property under $2,000 a meter. And so for me, I want to get as many core properties as I can. I want to get, scalable properties, like in a place like Georgia, for example, where I can easily and efficiently scale up multiple rental properties if I'm rentals. I want to get my bases where I want to live. But after I've done both of those things, what I might do is I might go and start to take some gambles. We recently did some R&D on Cairo in Egypt. I've been saying for a long time, one of the 4 cheapest capital cities where foreigners can buy in the world. Okay, well under $1,000 a meter in some places. You're talking about apartments near embassies that need a little bit of work. We found one deal for $600 a meter. At a certain point, I just might say, yeah, okay. People say there's some struggles there. I might just take a flyer on that at some point because I'm looking at it and saying, this is a mega city, and I'm buying in the middle of the city center at very low prices. That's interesting to me. Whereas people say, Andrew, why don't you look at Africa? That's the future of the world. And I find a lot of capital cities in the city center with ridiculous prices, insane prices. Some places like Angola, I mean, some of the highest in the world. Other places just doesn't make sense. And so it's all because I'm comparing, price per meter in US dollars. I can then look at the currency risk from that. And I can make a determination, where is this going? I can start asking questions and I can say, okay, now let's add the level of development. Now let's add currency risk. Listen, I'm looking at stuff now in Mexico City, under $2,000 a meter. Again, good locations. The risk there is also the risk, admittedly, in Colombia, where you've got some currency risk. All right, so against US dollars, that has to be factored in. I still think they're both, relatively good deals. So you can factor in all the different things once you have the price per meter and once you go from there. So if I'm looking at markets that are opening up and allowing foreigners to buy, a lot of times they just don't, factor in on that. If I can buy in a very pro-business country like Georgia, I see a country like Uzbekistan opening up very slowly. $1,000 in Georgia versus $1,000 in Uzbekistan, I'm going with Georgia because I'm comparing from that. Now, the last thing that you want to be careful with, especially when you're buying in places like Asia, is you want to be careful with things like view premiums, floor premiums. Whenever I'm going to buy a property, and I don't really buy property from developers, but if you're buying something, you need to factor that in as well. So that would be an area where, unless you're buying, the 50th floor penthouse and it's something magnificent, you're probably better off buying on the 15th floor, honestly, than paying an extra 12% to be on the 45th floor for the exact same apartment. So these are all things that need to be factored in. Definitely a starting point from which you can do all of your other research. That's how I buy property around the world, and I'm done some deals that I'm really happy about. Hi, I'm Andrew Henderson from Nomad Capitalist. I wrote this book, which you can find on Amazon, to distill a lot of the stuff we talk about in these videos and a lot of the stuff I've learned over the last decade plus traveling all around the world, teaching you about how to legally reduce your taxes, build your personal freedom, and create wealth faster. Definitely get a copy of this book if you want to learn more. Now, if you want to watch more videos, make sure you subscribe to our channel and make sure you click the notifications bell so you never miss one of our new videos with more tips on how to go where you're treated best. And if you're already a 6- or 7-figure entrepreneur and you'd like to put these strategies in place for yourself, go to nomadcapitalist.com and learn about how I can help you.